Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Friday. What's up, everybody? Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We are up 27 points today in the S&P, almost a full 1%. We're up a little over 1% in the Nasdaq. Crude oil is up big, 1.5%, and gold is down just a little bit. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. We're going to do what we do each and every day, identifying 10 to 12 futures markets for potential breakouts and reversals from an educational perspective. Let's go ahead and dive in. So yesterday we had a live daily market commentary around noon. For those of you that joined us, wonderful. Hopefully you enjoyed that and saw some of the things that we were looking at from a longer term perspective, where we kind of combined futures trades and lead that into options positions. Today we are going to take a look at a couple of different things. So yesterday when we did the DMC in the middle of the day, I had talked about the fact that I was not a big fan of all these lower wicks coming off of this supply level. So my advice was take a little bit off the table. Take a little off the table if you had multiple contracts, and then if you didn't have multiple contracts, at the very least, move your stop to break even, because I didn't like all this bullishness down here with these wicks. And so lo and behold, later in the day, we wound up popping up through the level. So no big surprise that's exactly what occurred. Got a decent little move out of it. Hopefully you were able to capture some of that. And so now we are rallying up very hard. Now we're rallying up pretty hard to this next level. Looking at this on a 4-hour, this is a level that is just below a potential breakout area. So while the level still does exist and it's still a valid area because it's the origin of this very strong move down, it is a level that I'm a little bit more concerned with that it will not hold. And my fear that it won't hold is because we've been up here a number of times. That's number one. Number two is that we've now put in a higher swing high, right? Once we got above here, by definition, we're going to have a higher swing high, and we have a higher swing low, right? So our trend direction on the 4-hour has kind of changed on me. So I'm going to leave this in as a confirmation to give it an opportunity to see if we get a reversal up here. And it very well could be that we rally up to there today and maybe have an end-of-the-day sell-off, which I'm not positive is going to happen, but we've had an end-of-the-day sell-off pretty commonly on Fridays. The Nasdaq level that corresponds would be this area up here. I don't like the way that we're approaching that level, especially with these upper wicks and starting to pull back a little bit. This is going to disqualify this area for me. And then this one is going to have to still be a confirmation simply because of the fact that we're in an upward trend on the 4-hour chart. So it changes the trade a bit. Now, on the hourly level, if indeed we do get a bit of a rally, I've been staying very much away from 15-minute levels on the equity markets, primarily because those 15-minute levels in sideways chop markets have been really, really tough to get anything from. You have this little area here formed right around the European market open, which is typically a good time of day to look for a level. So I am going to put this one out there. Understand that it's a 15-minute level, so your probabilities are a bit lower. But I'm going to put this one out there as I think it could be okay. Your stop, I'm kind of tempted to look all the way down here to this level, but the time of the day is horrible. So this would be the area that I'm looking at for now. Crude oil, we're putting in a bit of a base in crude on the 4-hour. We've talked about the base that we're putting in. We definitely have a higher swing high here now. And so coming into these 15-minute levels, I think that they're not going to necessarily hold. It's a good 15-minute level as far as structure goes, and your risk is very low, but I don't like the basing we're getting in front of it. So it's a little bit more risky, a little bit more exposure. I will say that this area down here, this level formed at midnight, is a bit of a parabolic move up. And we could get a retracement back into this region. So keep an eye on this one here for later today. In gold, we had a confirmation long, and we blew right through it, just as expected, and it has really done a whole lot of nothing since then. So now I'm going to remove that gold area. We could get a little breakdown today out of this, so let's see if we get some basing below this level, and this turns into a breakdown trade. Sliding into our bonds and currency markets, in our ZN, which is our 10-year note. We came into that level actually with a fair amount of speed yesterday in the late morning. 1, 2, 3, 4, 5, 6 candles later, we had done literally nothing. I mean, quite literally, it had done nothing. And so you have to take that one off the table. Now we've come to a point where we're fallen pretty strong. I'm going to look and say that there's a chance that we get a little bit of a pop-up today and rally up into here, and look for the next move down to fill that speed candle. In the Aussie is rallying very strong. We had a big move up off of this long wick in through here. This is another one where we have this midnight area. Midnight, there seemed to be a fair amount of movement in all of our markets, and so I'll wrap my lines around this one here. Midnight is usually a really good time of day in the Aussie in general. So you're at 67.91 by 67.85. Notice I'm taking all the way to the bottom of this wick. And then in the euro. So the euro, we came super close. Price moved away to this confirmation short. We've come into it a second time, but we've not yet come out of it. So I'm actually going to remove it since we've come into it but not yet come out of it. I don't feel like it's a quality enough level for me to lean on at this point, primarily because of all those wicks through here the first time around. Canadian dollar, we've got our level up here that we've not yet achieved. This actually could be a decent little reversal on a breakdown out of here if you want to give that a shot, only because we've hit here a couple of times. So, you've got kind of both sides here, but I would look for a potential on a breakdown based on all these reversal candles. If we get below here, you might get a little move, and then at that point I would call that a candle-to-candle opportunity. Great British Pound, Japanese Yen. The pound is flying to the upside. As we came to our supply level, got a little bit of a move away. 1, 2, 3, 4, 5. After 6 candles, we had done nothing. So it did give you the opportunity to get out for a break even or a little bit of a profit. But then, boom, it popped up in the overnight. Very, very huge. So as it's continuing its rally higher, we had talked about this area being a potential breakout a long time ago. But we don't have any basing or anything anywhere near there. So we'll hold off on it for now. But on a 4-hour time period, that's a huge move up. We're actually, interestingly, seeing much more parabolic up moves on the 4-hour chart. Price shock to the upward direction as we are coming closer and closer to Brexit. And then we are in the Japanese yen. So the Japanese yen sold off really hard. We've come back to the origin of a very strong rally. So if you're not in this one already and you're tempted to get into this one, your fair price value area that's opposing is right here. So this gives you that would be our 1-to-1 reward to risk. And this would be our 2-to-1 reward to risk. So it's about a 1.5-to-1 reward to risk position. Not terrible, but not great, and probably not enough to take that trade, especially since our big picture, if I go to my 4-hour chart, our big picture is still kind of sideways. So when I've got less than a 2-to-1 reward to risk, and I have a 4-to-1 less than a 2-to-1 reward to risk, and then a 4-hour market that's going sideways, one of the things that we tend to do is score all of our positions, and using a reversal calculator. And if that reversal calculator doesn't give me a high enough score, then I'm not going to be able to take the trade. And so that's kind of what I'm looking at in the Japanese yen. So If you guys have any questions, let us know. Shoot us an email, support@tradersarmy.com. Until next week, everybody, we will see you soon. Don't forget to join us for our free preview week, October 20th to the 25th. And I will talk to you soon. Later.